All right. Hello, everybody. Thanks for tuning in and welcome to another Cash Flow Sundays. We're already at number 3. And today we're going to talk about everything that happened in the stock market last week. We'll be looking at, what happened. Apple had an event. Oracle had earnings. We had some macroeconomic news about the producer price index, consumer price index. So let's dive into it. Before we get to the meat and the bones of it, I'm wondering how everybody is doing. I just had a dinner with my daughter and my wife. And my daughter, she's quite small. She's only 5 months old. So she's starting to try all kinds of foods, and it's really cute to see what she can eat already. So that was my evening, and we just put her to bed, and now it's time for Cash Flow Sundays. So let's get into it. And as always, we start out with our surprise of the week. And I was talking with an investor friend, and he was listening to the IPO about Magnum. I don't know if you heard, but Magnum, you know them from the ice creams. They are currently part of Unilever, and they're being IPO'd, they're being set up as their own independent company. And he was watching the presentation, and we heard a shocking number. The entire cost, the legal cost, the administrative cost of the operations to get Magnum its own business and its own ticker symbol and its own place on the stock market was roughly 800 million euros, just in legal fees, administrative fees, investment bankers. They take a big cut. And I think this is there's an important lesson in there. As you can see, Wall Street always makes sure that they are paid first. They receive the 800 million right up front. And next to that, there's very little known about this investment. There's no price set yet, so it's still very unclear what will happen. And I think a lot of big investors in Unilever are not really looking for a small ice cream stock to add to their portfolio. So that's something that we'll keep an eye on. So be sure to tune in every week from now on, and we'll keep you updated about what's happening over there. And that brings us to the real money movers this week. As always, we'll start out with the news. I don't know if you attended this, but there was an Apple event. Is anybody still interested in those? I think they used to generate a lot more hype, but currently they're, I've lost all interest. It's another iPhone. You can make pictures with it. There's a slightly better camera, slightly better screen, and slightly more expensive, and that's about it. But I think Apple as a business is still interesting to look at, and maybe we can compare it to Samsung later on. They had a new Pro, they had a thinner iPhone, new AirPods, new Apple Watch. Yeah, let's move on. Quite boring. I think what's more interesting is what happened to Mistral and ASML. Mistral is a French startup, and it's an AI startup, and I think it's the biggest AI startup that we have as Europe, against OpenAI and all the other big models from China. And a big company in the Netherlands here invested in Mistral, about 1.5 billion, and it's to boost their own production. And ASML is a big production company of chip machines, the machines that make the chips. So they supply to TSMC, they supply to Samsung, they supply to Intel, and they actually invested in this AI startup. And I think it's a hugely strategic investment for Europe as a whole to create their own AI infrastructure. Now we have the machines to create the chips, and then we also have the software that can run on the chips, and that can be cutting edge. Quite right now, Mistral is still a very, very small company. I think they're only about a fifth as big as OpenAI. But with a big cash injection from ASML, they could grow. And I think that's quite an interesting development. Nobody saw this coming. There were other companies looking out to invest in Mistral, but ASML was the one who ran away with it. Maybe there's some connection between the French CEO and Mistral being a French business. Who knows? But I think an interesting development. Next up, Oracle. They had quite a good earnings call, and I think they released earnings on September 9th, and their stock rose exponentially, and mostly because they have a huge order book, and their shares have already risen about 45%, according to this article. And there could be more in it. I think Oracle is a legacy business. They have a lot of data centers, and mostly a legacy business. So they're still in the AI game. They're still relatively new, but with their huge order book and their infrastructure that already exist in a lot of businesses, they could be quite well positioned to profit from this for the future. And the stock is already rising. I think that's quite good. Is there anything else interesting in this article? Yeah, they're betting on the AI cloud tools. Yeah, I have to catch my breath. I'm going too fast, and that happens. Thank you. Let's see. Yeah, they expect $500 billion in booked revenue just for their infrastructure business, and that's a huge uptick. And it's mostly generated by growing demand for relatively low-cost cloud infrastructure services. And I think one of the big competitors for Oracle is Microsoft. They have the huge infrastructure. They already have their huge ecosystem, Microsoft Teams, Outlook. You all know what they offer. And Oracle is still relatively new, so we'll be looking at them later on, and we'll be comparing the two businesses and see where they end up and how they match up to each other. Then Adobe. We talked about this last week as well, and they reported their earnings, and their AI sales are coming in strong. It's yet unclear whether they will lift the stock. Do you know if it's their entire year plan or only the final quarter? Yeah, I think about Oracle, they only talked about their quarter for 2025. And I think they raised their expectations for the entire year. And they released earnings up to up to last quarter. And what they will do this quarter is yet uncertain, but they expect to outperform what they set out to do at the beginning of this year. And if we move on to Adobe, we talked about that last week. They're coming in strong. Their AI sales are booming, and I think that's quite a big question around Adobe in general. Everybody was quite uncertain whether or not they could catch up to the entire AI race, whether they could develop their software into a product that people still want to use. If you compare it to what ChatGPT is already able to do, and there are a lot of newcomers and new players in the market that can drive Adobe out. I think Figma is a big one, but there are no players that offer the entire product suite that Adobe offers, and that's where they still have a big moat. A lot of people are used to working with Adobe and they want to keep using Adobe, but they're also quite expensive, or they're really expensive, and once you get stuck in their ecosystem, it's really hard to get out of. So I'm interested to see if they will still be the top dog in a couple of years from now. But currently they're doing well. Their shares were down a lot, but upon this earnings call, they rose up because investors got the confidence that they can catch up in the entire AI race and actually participate and be competitive. So that's interesting. We'll be keeping an eye on how this develops. And then next up, I think we cannot get around talking about tariffs and about Trump, even if he has been quiet the last few days. His tariffs and the effect of the tariffs, I think, is slowly starting to show. And the Federal Reserve, which is tasked, or one of the tasks that or one of their responsibilities is to look out for inflation and make sure inflation stays below 2%. And they look at the price development. And the producer price index talks about the margins that wholesalers and other businesses that deliver to the end customer, what kind of margins they make and how much their prices are increased. And this is quite an interesting market to look at, because these are the places that will feel, or they will get a hit. They will get a hit of the price increase that comes along with the tariffs. They would have to pay either more upfront when they import their goods, or they will have to take a cut when they sell it to the end consumer by not raising prices. And I think what we're seeing here is that their margins have decreased by 1.7%. I think this is a key takeaway. The rest of the article talks about the prices barely changing about 0.1%, so we can neglect that, but their margins dropped quite significantly by 1.7%, and this shows that it could show that they're taking a little bit of a hit on the tariffs. And if we look at another important summary that released last week on Thursday, is the consumer price index, and this is the price that the actual consumer pays, and we saw a massive increase by 0.4% for just 1 month. And over the last 12 months, or the trailing 12 months, that means a total increase of 2.9%, which is above the Fed rate of 2%. And everybody is expecting the Fed to decrease the interest rates. And what's actually quite interesting is that they will be having a discussion about this. And on Wednesday, they will have a decision about the interest rate. So then we'll know for sure. So we'll keep an eye out on that. And I think that's a great segue to what else is happening next week. September is usually quite a slow month. There's not much happening. We had a lot of the earnings seasons already behind us. I think Nvidia, Alibaba, Oracle, Adobe, those were some of the big names. We can expect FedEx, General Mills to report earnings, but I'm not really interested in those. Mark Zuckerberg will give a keynote. Yeah, I'm not really interested to be honest. Then we have US retail sales, could be interesting. But I think the highlight is the Federal Reserve interest rate decision. So if you want to hear about that, stay tuned and follow us. And you can follow us on the socials, on Insta, on TikTok, on Twitter, and we'll be talking about this. And as always, we'll be live on Sundays. So if you want to catch up on what's happening, stay tuned. And I think that's everything that happened last week, and it will happen next week. So now we're getting into the fun bit, and that's the stock market battles. For the stock market battles, we'll be using Market Daddy. This is the software that we developed. The reason why we developed it is because we felt there was nothing quite like this out there. We wanted to invest, and I have limited time to invest. I have a family, I have a full-time job, and I needed a platform that allowed me to take the time out of investing, but still give me an edge in the market. And that's why I created Market Daddy. We use AI to summarize a lot of data, and we display that through our software. And you can use it yourself as well. You can try it out for free for 7 days, and then you can cancel anytime. And if you like it, and we believe you will, you can subscribe to it for a small or for $10 or €10 a month. And you get a little discount if you subscribe for longer. And what we're trying to do here at Market Daddy, we're trying to make your money work harder. And we're here for the retail investor who is limited for time, who has a full-time job, who can't keep up to date with everything that's happening in the stock market. And we do that in 2 ways. The first is through our software, and the second is through our community. Every Sundays we'll be live on Twitch. There we can interact with each other. I can give some tips. You can ask some questions. We can have a good time, and that's how we will make sure that your money is put to work effectively and that you can invest for your families and your own future.